Monte Dei Paschi is one of Italy's largest banks, with assets of €138 billion and 1,300 locations. Since its founding in 1472, it has weathered many storms, including the Napoleonic Wars, both World Wars, the Great Depression, and countless others, to become the oldest bank in the world that is still in operation today. Welcome back at Financial Fortune, your daily advisor that gives you news and tips for financial success. Just keep on watching. By acquiring several other Italian financial institutions in the 2000s, the bank quickly grew. Their stock price was skyrocketing, and they quickly earned a reputation as one of Europe's leading financial institutions. The bank grew rapidly, but its success was built on shaky ground. Its stock price has dropped 99.986% since its 2007 high. If you had invested €175,000 in the company's stock in 2007, you would now have €2.46. Its ex-president was found guilty of masterminding a massive fraud today. More than €14 billion have been spent by the Italian government to bail out the bay. Monte Dei Paschi has been bailed out by the government multiple times, but it is still struggling. It has persistent issues with NPLs and has not been able to keep sufficient capital reserves as mandated by the European Central Bank. The stock price of the bank keeps falling despite the government's repeated bailouts. The crisis at Monte Dei Paschi has prompted broader discussions about zombie banks in Europe. The central argument is that banks like Monte Dei Paschi are doomed to perpetual loss unless the government intervenes. This wastes money that could be used for other purposes and places an undue burden on taxpayers. Discover what the rise and fall of the oldest bank in the world can teach us about banking in Europe in this video. History of Monte Dei Paschi. It's been around since 1472, and it's a non-profit with strong ties to the Catholic Church. They made loans to those in need at low interest rates because they cared more about helping people than making money. It eventually became a business with the sole purpose of making money. Through centuries of consistent banking operations and the addition of new branches, it grew to become one of Italy's largest financial institutions. After Monte Dei Paschi went commercial, 51% of its stock continued to be owned by a non-profit organization. The bank was established in Siena, and the city's residents established the foundation to aid those in need. Since the bank invests hundreds of millions of euros annually into improving city infrastructure, funding cultural events, and even sponsoring the city's soccer team, it has gained widespread acclaim among locals. Monte Dei Paschi had a prosperous 2000s. They made a concerted effort to grow by opening new branches and buying up other, smaller Italian banks. Due to soaring property values, very few borrowers defaulted on their mortgages. This resulted in annual net income for the bank of over €1 billion from 2004 through 2007. Giuseppe Massari, formerly a lawyer, was hired as president of Monte Dei Paschi in 2006. Massari intended to further accelerate the development of the business. With roughly 1,000 branches in 2007, Foreign Veneta was the sixth largest thing in Italy, roughly half the size of Monte Dei Paschi's 2,000 branches.
We can bring you some of the day's top business news stories now with Stephen Carroll. Hi, Stephen.
Hi, Catherine.
And you're starting us off with some difficult news for the world's oldest bank. It looks like it's heading for a bailout.
Monte Dei Paschi de Siena has just a few hours left, and a deal to swap debt for equity earned the lender just over $2. It's so far been unable to find an anchor investor. It's expected the bank will seek a cash injection from the state later on today. The Italian government has already secured parliamentary approval to put up to €20 billion into the banking sector, but the biggest concern is over Monte Dei Paschi, as Brian Quinn now reports.
After more than 5 centuries of operation, Monte Dei Paschi de Siena is limping towards government bailout. The bank's current woes began with the poorly timed acquisition of a local rival on the eve of the 2008 financial crisis. Since then, it's burned through €8 billion in new capital. This summer, the European Central Bank listed Monte Dei Paschi as the weakest among 51 banks who underwent stress tests. It needs to inject €5 billion by year-end or risk being wound down by EU regulators. To do so, the bank has been trying, without success, to raise private funds. A €5 billion rescue plan led by JP Morgan fell apart Wednesday. A debt-for-equity swap with bondholders has raised just over $2 billion, far short of what's needed. That will almost certainly bring in the Italian government, who on Wednesday approved 20 billion euros in government borrowing to shore up the country's troubled banks. Monte Dei Paschi is just the worst example in an Italian banking sector bending under 360 billion euros in bad debt after years of economic underperformance. Its shares have fallen 86% in the past year alone. Italian banks on average have halved in value. Under EU rules, a bailout by the Italian government means that thousands of private investors holding over 2 billion euros in bonds issued by the bank could take losses on the debt.
Everybody is well aware of the challenges in the banking sector in Europe, and that's one of the reasons why European markets have struggled so much relative to other global markets. I think the fact, at least from what it looks like right now, that we're not seeing a broader risk-off move across U.S. futures or even broader European stocks tells you that investors are not looking at this the same way they may have been 12 or 18 months ago when this sort of headline would have sent markets into a panic.
Why do you think it's not sending markets into a panic?
I think what we're seeing now is a broader-based global economy that has much better footing. We've shifted away from the playbook over the last couple of years that was based on monetary policy, deflation, low growth, to a more reflationary, better growth environment. And if you think about that, that's supportive of the banking sector. Higher rates globally are a good thing for banks. So I think investors are looking at this certainly as a risk, but also recognizing that there's a lot of other positives going on in the world that mean that this can probably be more isolated than they may have thought in the past.
So steepening yield curve, good for European banks overall. We saw the stocks react yesterday, but take us into Italy, specifically the Italian banking sector. If there are these difficulties with Monte Dei Paschi, as there are, how much does that tell us about the rest of the Italian banking sector? What questions does it raise about other Italian banks?
Well, I mean, I'm certainly not an expert on the Italian banking sector, but you know, we've seen this story play out multiple times over the last couple of years, and you know, I think in some ways reaching some sort of resolution around this, you know, who knows what that will be, but that probably brings some stability to markets. To me, I'm less focused on Italy and Italian banks specifically, but on some of the opportunities in Europe more broadly.
Yeah, well, you're surely focused on global politics, and for me, there is a clear line here that needs to be reconciled. It's the rules that are set in Europe and the politics as they emerge in places like Italy. The rules right now say that if you can't raise capital and you need state aid, well, that means you're going to have to bail in shareholders and bondholders as well. A lot of those bonds are held by retail money in Italy. That's going to create a political problem at a time when Italy is set to go back to the polls within the next 12 to 18 months. The politics in Europe, what does that mean for your world?
Well, one, I think that the challenges of the Italian banking sector and the fact that it is the retail client base that is the holder of so much of this debt has been one of the things that has caused this to drag on for so long, and the reason why they haven't been willing to take the pain. I think if this year has taught us anything, it's that trying to invest based on politics, guessing outcomes and how markets will react, whether it was Brexit, whether it was the US presidential election, that's really not the way that we're thinking about investing money for portfolio, for our clients. I think that the political situation in Europe may create an opportunity for us because the fundamentals are really about growth, and that I think is in better shape.
I'm curious as to your opinion of Monte Dei Paschi. Leave a comment and let us know what you think. Please keep watching, and we'll see you in the next episode. If you liked this video, please give it a thumbs up and consider subscribing to the channel.